All right, well, let's go ahead and get started. Good afternoon, everyone, and thanks for joining Tech Talks today. For those that don't know me, I'm the moderator, and we typically host discussions with kind of technology providers and traditional finance solution providers. So today we've got really happy to have a guest. It is Arcady Lapiro, and he is the CEO and founder of Agora. They help banks and credit unions expand their digital capabilities without replacing their core systems. So it's an area that I don't know a whole lot about. I know we've got expertise at SRM that does, but Arcady is a pro at this. So I am super excited to hear your overview today. And then just want to let people know I'll be checking the chat. Feel free to ask questions during the presentation. We want this to be conversational. And so don't hesitate to ask questions. I'll pop in with some as well, probably. So with that, I hand it over to Arcady, and thank you again very much for joining us today.
Thank you, Larry.
There you go.
Hi, everyone. Good. Thank you, Larry. Hi, everyone. Thanks for attending. Thanks for having me, Larry. Lapiro, CEO and founder of Agora Financial Technologies. We are a fintech, to be more precise, in two verticals: bank as a service and embedded fintech, which are two different concepts. Same technology can be applied, but in different ways. I'm originally from Europe. I'm a long time here in the US, mostly because of my wife, but that's called love, the French love. I'm in the banking industry. Back in 2000, I was part of a founding and management team. I built a group of two companies. One was a digital bank. You can think like a Chime, but we were doing everything, including lending, mortgage, wealth management, brokerage, like a Robinhood, etc. And the ancestor of bank as a service. And we grew within 8 years of the digital bank to have a $20 billion asset, 20 billion. Just to put in perspective, Chime with one product, which is just a debit card and a secured card, after billions of funding, 8 years, they're less than 10 billion and not profitable. We were profitable. The two companies still exist today, 24 years after, in Europe. So I'm kind of very proud of what I built in the past. So I'll go through. It was mostly about sharing view on the market, explaining concept. Of course, I'm a provider, and there's always a sales pitch. So I will describe what we do, but we put that at the end, just not to start with it, but really at the end. And if you have any question, chat. The idea is to be more like a fire chat, more interactive. I like exchanging view. I may be viewed myself as a contrarian, but you have a lot of white hair. You don't see it on the camera, but what's happening today, it's not new. The digital banking, it's not new. It happened 2 decades ago, and it's just a reshuffle of history. So you see the screen, right? The deck.
Correct. Yes, we can see it.
Okay. So what is the market eating? I'm not talking about the collapse and the failure of Silicon Valley Bank or First Republic and Signature Bank, but there's an acceleration. There's a trend that started back in the end of the 70s. There was a kind of acceleration early 90s with certain banks collapsed, and now there may be a new acceleration in the next 20 years. We've been at almost 16,000 banks, and within the next 50 years, approximately less than 500. So some people may say it's aggressive. Some people may say it's logical. But there's a trend everywhere in the world, and the US has a different story because of its geography, history, economy, population. But there's a trend. So banks and credit unions may have survived, but the situation today is different. My point is not to scare, but there's a real different situation today versus before. Before, it could have been driven by a real estate crisis or interest rate or certain industry collapsing, like steel or automobile, things like that. But today there's a change. It's called the barrier entry to technology, and I will make a focus about what is called legacy core. So one side, you have an entry barrier to technology, which is increasing. The second one, there's a fierce competition of fintech neobanks. So some people may say that they're less scared because the funding of fintech is drying up, but the big one are winning. So Chime is not going to go away. Current is not going to go away. Cash App is definitely not going to go away. And Apple, which is the biggest fintech, is as you saw right now, has collected 10 billion deposit within few months with a basic offer. And on the other side, you have JP Morgan, which is can you open maybe the deck on your side, because I don't think that's the last deck, but just in case of, please. So JP Morgan right now, they're investing not 12 billion but $15 billion per year. They moved their retail customers to the cloud, and they announced last week opening in the next 3 years 500 branches, renovating 1,700 branches, and recruiting over 3,000 people for their branches. Can a credit union community bank compete with branches? No, they need to compete on another. And it's here. It's the right deck. Sorry. They need to compete with.
It's fine.
Yeah. So I put it here. So Apple drained a lot of new customers and deposit within few weeks and months. JP Morgan is accelerating in the retail industry, and the real enemy, let's call it this way, or nemesis of credit union community banks are not really the fintech. It's Chase, and Wells Fargo is going to come back. Their consent order was just lifted like few days ago, and they're going to come back in the game. The Citi is drastically restructuring its branches also, and Bank of America is here. So that's a real where the market is heading. So your credit union, your community bank, you rely on legacy core provider. When I say legacy, because most of the technology is built with a 40 years plus technology, COBOL, for example, or Python, and I'm sure all of you guys are super excited using them. But there's no acceleration. Yeah, sorry. Go ahead.
Yeah, I was just going to ask here, because you're talking about the core legacy providers. Are there new players that we should be watching, and then do you expect consolidation or expansion of the competition out there?
So I'm going to talk about more where the market is going, and then competition. So 5 years ago, because your question is today, but the question raised really 5 years ago. There was a new wave of providers, Neocova, for example. I'm not saying that they were a core, but they positioned themselves as a core. There was a recent article last week saying they'd never built the core. Nimbus is positioning itself. They went through different iteration of management. They have an amazing CEO today. Mambu came to the US. Thought Machine is coming to the US. So for the last 5 years, and just don't get me wrong, Agora is a next-gen core banking platform, but I don't see the market switching into that. So I'm going to go directly to your question. 5 years ago, the question was raised, are we going to see new players? So this is a shot 5 years ago and today, and you see that 5 years ago and today, the market share more or less didn't move, and even worse, legacy provider increased the market share. So one, it's like the market itself is not moving. So there's a buzz, or there's a dream, or there's a myth about new players coming, taking over. It's not happening. That's one. Two, regarding concentration. So among the big player, they're not buying anymore their peers as of today. Never know. For example, there's some not rumors, but Finastra, there was some news on the market that they were looking to sell Finastra of the world, all their businesses. So they may be out. Mambu is retreating more or less from its physical presence from the US. So the new players are not. So now the legacy player, do they have a strategy of buying out competitors? Not really. Are they trying to build up a new core platform? Not really, because it's going to cannibalize their revenue. So some of them are buying new providers. So FIS acquired Bound, SF acquired Exact. But when you see down the road, it's not for community banks, credit union. They bought it in a play for fintech. I'm not saying it's successful. I'm just saying down the road, it's more going after for bank as a service. So I'm going to jump your side to see who are the players, because you mentioned what. So there are some new players coming. So you have Nimbus, Treasury Prime, Bond, which was acquired, FIS, Technicis, which was acquired by SoFi. But Technicis are more lifetime trained. You have Synctera and you have us in unit at the same level in terms of market recognition. All of these players, they're going after fintech, bank as a service fintech. We're going after bank as a service and also embedded fintech. So just coming back to the question, it's like, one, the legacy core, there's no more concentration, more or less. Two, they're not when they do an acquisition, it's mostly to go to a different strategy. And three, the new players are not making it in a core banking, purely core banking. That was your question, right, Larry?
It was. Thank you.
Yeah, thanks. So if you're a credit union community bank, are you happy with your legacy provider? Are you concerned about what is called technical debt? It's a massively, if you take a very concerned and somewhat concerned, when you say somewhat concerned, it's a concern. You can see that it's a massive concern by the legacy. And are they going to increase, decrease, or keep the same budget? You see, it's 51%. Another consulting firm, advisory consulting firm, mentioned over 70% would increase the budget. The question, increasing the budget is great, but when you compete with JP Morgan, who has a 15 billion budget, IT budget, and it's a large budget, it can be keeping the legacy fintech acquisition. They just spent 1 billion on one fintech outside the US, so it can go fast, 15 billion. So the question is 50 billion, not by the number, how you allocate it, but still 15 billion is there. If you're a credit union community bank, 500 million, can you compete? No. So you have to be smart. Can you rely on a legacy provider? You see the result of a survey. So the question is like, how you're smart, what kind of technology you can leverage, what kind of strategy. And this is where embedded fintech is coming, and with a new technology, which is called modular banking. Any question? Good?
No, that's good.
Good. So now I'm going to kill another myth, another buzz, which is a bank as a service. There was a lot of people were saying there's a rush of bank as a service, and many community banks jumped into the wagon. And I'm not talking about the regulatory crackdown, which is another topic, but just as a pure business. Let's talk just about the business. 10,000 financial institutions in the US, more or less. On the other side, you have overall approximately 500. Let's run it to 500 fintech that really needs a bank sponsorship or bank services, because some fintech are more reward and they can bypass certain things. But just to make a wrap up.
You froze on us there, Arcady. Are you still with us? There we go. You're good. Sorry.
Yes.
You had you froze up.
700 fintech. It's still frozen?
Yeah, I would say cut
still
your video. Try cutting your video, and you can keep sharing. Just cut your video. I think that would help. It's probably bandwidth
it's good
issue.
Now?
Yeah, go ahead and try that. That seems to be better.
Is it good now? It
is.
Good. So 700 fintech, how many bank sponsors are needed? So in terms of projection, there are approximately, end of last year, approximately 130 bank sponsors for 700 fintech. And the average of one fintech per one sponsor bank, it's 31%. What does it mean? That means in the next 2-3 years, it's not a question about the regulatory crackdown. It's one thing, but just not viable. That doesn't mean that bank as a service is not a viable business. It is, but it won't. There's no need for so many bank sponsors. So where is the reality? the reality of a business, it's what is called, for providers like us, especially we are a bank as a service, but also an embedded fintech strategy. We believe that what is needed, and if you go back to the concern of banks and credit union, is credit union needs to be smart as community banks. They cannot compete with cheese, not on a branch, not on the technology. They need to focus on niche segments, niche products, and to have better access to their customers, members, wherever they are. And that's what we call, they have a need to have access to, let's call it a marketplace or platform that can offer them, almost like a Lego box, the capability to build over their core the product they need, the feature they need, or their client need, and also to plug in external providers or external fintech. So basically, it's not a plugin, because some people are saying, oh, we're coming as a middleware to plug in. It's more than that, because it has to be a mix of core and a middleware to create the entire product and the use case. And that's what we call embedded fintech. And this is where we're coming with our strategy. So what we are a core banking system, but we're not looking to. We are a middleware platform. What we built, it's a modular platform. Think about Lego box, which is customizable. We can build any use case, and we can be multi-tenant for each of our clients there into a separate account on the cloud, because we leveraging the cloud. So there's no data mitigation. There's no issue with ABO account, which was a main issue for certain bank as a service provider. We are leveraging what is called microservices. And I'm going to call another myth, which is the API. So there was a buzz about cloud-based banking. Now there's a buzz about API layer. An API is just a communication tool between one platform and another. It's just communicating between two platforms. So if you're connecting with a legacy provider, with a legacy platform, you're still using a legacy platform. So you see the issue on the scalability and evolution of the platform. That's why what is needed is, of course, cloud-based is needed, API is needed, but what is needed, it's called a microservices design or architecture. What does it mean? Is slice. Basically, you take the entire core and you slice every feature, every function into different line of code that can be, you can assemble and disassemble the way you want it. So today, what is needed to move forward, it's cloud-based, the API, and the microservices architecture.
Greg, quick question.
Yep.
You said two modular program. What's the difference between modular program and the core? I think I understand, but I figured I'd let you explain that a little bit more.
Yep. So when you take a look at the core, basically it's inside the same word. A core is like it's a central platform, which by definition it's not flexible. You have to abide by the core and you have to take it as it. Modular banking, it's you slice the core and you slice it to disintegrate every single feature that are getting disconnected from the others. That means every function, every feature is working in parallel. Okay,
that makes sense.
Okay, so yep. It's like it's a new way of building it. So really a different way. But that allows full flexibility. So what we did also at Agora, we built a one-stop shop. So we even coming when, for example, for our fintech with a bank sponsor, we have card issuing capability, KYC, QAB. When I say we're country agnostic, our platform talks in every language that is needed. Today we talk. When I say we talk more than that, but the platform itself can communicate with the end users in English, Spanish, French, Arabic, and we can add within a few days any other language. So, for example, if we have a fintech or a community bank that says we want to communicate with a Brazilian customer base or Chinese, we can just set up in a few days, 2-3 days, the language. It's like inserting a line of code. What basically allows modular banking technology, and that's a strategy for community banks and credit unions. As I said, they can compete with Chase. They're able to compete with certain fintech purely on the design. For example, if you take, for example, Chime has a very simple product. It's like an Apple, like Apple. The product is simple. The user experience is very sleek, efficient. But if you're a community bank, I'm kind of surprised, because today, when you take a look at the app of the community banks and credit union, I'm sorry to say that it's kind of basic, and even the design is very basic. And today, the user experience, it's like web marketing 2 decades ago. There was a gold rush, and then it was a pure commodity. And today, if you want to duplicate, for example, the design of Chime or Current or even Cash App, it's not complicated on a pure design. What is complicated, it's the platform behind it. So that's where modular banking is coming. So if they're looking to go either niche, either product-focused, product-orientated for certain client, or they want to launch a standalone offering, that's what modular banking allows. So either it's you launch new products. Sorry.
Arcady, a couple questions. So one, I've heard this concept of a side core. Maybe you can explain that a little bit.
Sure. So just before explaining, so there could be 3 strategies for a local financial institution. Launch new products, which are fully built. It's not a feature, it's a complete product. Teen banking, small medium business, certain community bank or credit union. It's mostly credit union can say, we want to launch cannabis banking. I don't recommend cannabis. I'm from a head compliance. I'm just giving an example of your niche. You can innovate on existing products. So it's product features, not a complete product. Or you can launch a digital bank, and this for that it's the sidecar strategy. It's a good way. So what is a sidecar strategy? There are different usage of this word. A sidecar means, by definition, you have a main core, but you want to go away from this core, or you want either to launch something, or you want to dissociate. You're using another core, which is a sidecar, a newer version of a core. What for? Either because you want to launch just a niche product and you want to go fast and you want not to use your legacy provider because you know it won't work. So you take another provider for the sidecar, or it's a strategy to go away from your legacy core and you make it in phases, or 3, it's because you have a very good price proposal and they're coming with a solution. So the benefit of a sidecar, it's like it allows you to be agile, flexible. You reduce your cost by definition. It's approximately 60 to 70%, could be even lower than that. Why is it so cost effective? Because when you work with a legacy, the pricing, which is high by definition, and they don't leverage the cloud, they don't leverage the new technology and cost reduction with new sets of provider. You mitigate the risk. Just to be transparent, whenever you take a new solution, you always have a risk of migrating to the new solution. That's a theoretical risk. But high level, if you go to a sidecar, by definition, it's more flexible and more reactive. So you reduce 1 risk. 2, it's only part of your customer base. And 3, you do it in phases. So you can control it. You can do it overnight or the weekend. And finally, the sidecar, it's scalable. Because if you move away from your legacy core, it's because at least it has to be scalable. The reality is, I'm not going to give any name, but you will find it will be in the news in the next few weeks. There was it was one report this morning, and Larry knows about it. If he wants to mention the name, he can. I won't. Certain new providers providing a sidecar option. At the end of the day, they weren't unscalable and they didn't have the technology, the real technology. And it's not about gossip putting name, because I didn't mention any name, but it's not because you use a marketing word that it translates into the reality. Any question?
I've got another question. and maybe you can talk to this because there are, there's a number of banks that were offering banking as a service. I think like
Yep.
Blue Ridge Bank Shares, Cross River Bank, Choice, and a bunch
Yep.
more that are rumored to be in the pipeline that faced regulatory action around oversight of fintech partners. Is there a general theme of what went wrong there? And then if so, like how can those risks be mitigated?
So down the road, so as I say, there's a lot of buzz around bank as a service as a concept, but bank as a service is not new. It's already here for the last 2 decades. What is new is there was two things were new. One was the acceleration of fintech. Two, certain providers, bank as a service provider, not bank, came and positioned themselves not as a middleware, but as a middleman. That means they claim that they will do all the control on the fintech. They will do the reconciliation. They will do the fraud. They will do everything, basically, and even approving the programs without the bank approving it. I'm not saying that the last piece was agreed with the bank sponsor. It's what effectively happened, and unfortunately. I will give you one example, not stating any name of the fintech or the bank, but it was last year. A fintech did a press release on a Thursday evening, and the press release was, we're going live, we're launching the first debit card, not prepaid, debit card, checking account on crypto and fully anonymous. That was a press release. Friday morning, overnight, the bank kind of woke up. They didn't even know that it went live. It went live, and the next morning the program was shut off. So that's an extreme example that I gave. So what went wrong? It's there was too much success, and on the other side, the regulator tried to understand. And if you take a look at the consent orders, the few consent orders that are out, it's not about there was a fraud. It's not about that there was massive irregularities in the QIC or the BSA. It's just about the oversight. So what the regulator said in these consent orders was not about the tech provider, but about the bank by saying, you launched this business, you didn't have the accurate people, you didn't have the right platform to monitor them, and we giving you a consent order to ramp up, a few things, either to stop certain fintech or to exit the business. For example, Blue Ridge was forced to not to exit, but to reduce significantly his fintech customer base and to ramp up. And there could be a second phase or third phase if banks are not applying, they should just exit the business, but that can happen. So it's not new. It's just like there was a clap and a slap on this certain bank sponsor, which were not organized. The question that can be is, can the bank themselves can be scalable for the fintech? So not giving a name, but one bank sponsor is stopping with a BaaS tech provider, and they claim that they built API to power efficiently and in a better way the fintech. But as you understood before, building an API layer is not solving the situation. You need to have all the entities segregated. You need to be multi-tenant. You need to be able to deploy in time the fintech. And just giving an API to a fintech to call the legacy core provider to create an account, which most of you are not happy with, you see that it's not going to be scalable. So that's why it's needed. My belief on the view on the market, it's like there's a need for hyper specialized bank sponsor and hyper specialized bank as a service or embedded fintech provider.
Yeah, so back to my original question, I think that the takeaway there is that credit unions and banks can't pass off their compliance to the fintech partners, right?
No, and by the way, 2 decades ago, I was a former head of compliance. I built the ancestor of bank as a service in Europe, and we grew the business to over 60 asset under custody. Some of my clients, for example, was ING Bank, Deutsche Bank. I had some business unit, and I was doing the outsourcing for them. And there's no bypass. It's like who is regulated has to do the control. So the fintech can control because it's their P&L and it's their customers, but they're not liable. They can be liable if they deceive the customers, for example, on UDAP and things like that. But everything about compliance, onboarding, fraud, at the end of the day, it's the bank which is always responsible. And if they're looking to delegate this control to a technical platform, for example, like me, I didn't do that from day one as a setup because I thought it was not legal and compliance. So we didn't do that. Certain of my competitors, not named, but that's why that's why you see all these issues right now. They did that. They claimed they don't know what is compliance. Recruiting the right people and keep them, it's a pain. And at the end of the day, they didn't even do it. So it's not just a wish list. It's who is regulated, who is doing the control. Has to do with
Arcady, what you mentioned as I think what is an example, one of the providers that kind of rolled out something with crypto probably before it was ready. If you went back to the slide, the module banking technology deployment options, I think on that slide there was listed like digital issuance, SBM accounting, rewards. Yep, that's the one in crypto. So I guess the question is, do you offer crypto as a add-on? And if you do, one of the questions that someone had put in there is it currency agnostic, fiat in digital or crypto? Like, I guess how's that? Do you offer that as an option, and then is it in native crypto or something else?
So just to be transparent, it's this is a slide by Agora, but that
Okay.
doesn't mean it's an example. That doesn't mean we do it. For example, we don't do crypto, so we don't do crypto. I'm saying like as a strategy. I could have put also cannabis here. That doesn't mean we do that. We don't do cannabis. We don't do crypto today. We can do it if I want down the road. We decide for the moment not to do it.
Okay, that answers the question. Thank you.
And that's why it's also important, like for the bank and service tech provider to have a roadmap on its product, on its offering, because the bank is going to be the bank sponsor. They're not going to be here, for example, to help the fintech on the strategy. The bank, or the creation, they can have a strategy on their road. But if the provider they're working with is coming also with some idea on the strategy and also with product or features which are pre-built that no one has, that could be interesting. And that's also a positioning. So we're coming also by saying like we're not just plumbing, we're not just a modular platform, we're also an innovation lab. And this is because what I did personally 2 decades ago. So for example, teen banking today is booming in the US. We have a solution for that. But 2 decades ago, when I launched the online bank in Europe back in 2001, we launched the first teen brokerage account, and that was already back in 2001. You may have heard that there's some fintech launching, for example, an elderly account. It's called Charlie. Back in 2002, we launched for our main shareholder at that time, who was one of the biggest insurance company in Europe. We launched an elderly brokerage account. So there's no new product. It's only a new way of using a technology and marketing, and of course, user experience.
And are there particular segments you're targeting?
So we're going after 2 segments: credit union community banks on one side, and for them we're going with what you see here, which is can be 1, 2, or 3, which is either a pre-built solution. So we have a niche banking solution, we have a teen banking solution, we have an SMB banking solution, and that includes everything, even the front end, and even product that even fintech, B2C fintech, they don't have it because they cannot build, because they don't have a modular banking platform like we do. And I will give you a very pragmatic example after.
No, go ahead. That's great. I appreciate that.
Yep. And we have 2 additional niche for credit union community bank that we're launching, which are down the road, end of this year, which are elderly people and migrant. So for the community bank credit union, we're coming with white label pre-built solution a la carte. Basically, it's embedded. They want a bot, they want digital onboarding, they want a wallet, they want a card issuance, virtual, etc. We can do that. Or they want to do a complete sidecar or side digital bank. It's what we call tailored platform. We can do that. And on the other side, for the fintech, we can power from A to Z of fintech to launch.
A second.
Sorry?
Was there a question there? Okay, go ahead. I thought there was a question, but.
Me too. I thought that's why I stopped. Sorry. I will jump this slide. There's no point of spending time on this slide. So this is so we build also a fintech ecosystem, and this will be part of what I called building new products and features. So it's even being ahead of a curve. So we have a complete fintech ecosystem, and we're adding new providers and discussing new partnership. I'm going to come back to this. No, I can stay here. So this is basically what we call modular banking. Modular banking, it's not just at the end of the day just switching the platform from one bank to the other one. It's at every level of a platform to be able to plug or to unplug any provider. I'm giving an example. If a community bank says, we want to have a solution for business, we want to have a solution for retail customers, it's two different onboarding. You have one QAB, one QAC, but it can be also, it can be, say, we want to have a customer base, retail customers, which are US resident and non-US resident. So it's different database. So we can, on the same instance, we can say, we have community A, they have retail customer base A, US resident, retail customer, customer non-resident. We can say for the one who are not resident, we're not issuing plastic card, we're issuing only virtual card. We're using an additional database, and they're not allowed to do and we activate international transfer. And for US resident, we say US resident is plastic card plus plus a saving account, plus a virtual card, plus a domestic, and we can unplug the international. I'm giving an example of use case. This is an example of use case. So here it's like what really we call modular banking. It's at every level. We can extend. We can put 3 different providers on the QIC for 3 different customers. Can say they say we want to use a card processor for certain of our business, another one. It's fully scalable. That's what we call modular banking. And as you see on the right, we're adding down the road. We have planned adding different features. Most of them are already implemented, by the way. But down the road, it's lending features, FX feature, OCR for that automatic data extraction of certain document. We have already an OCR for data extraction, but we're planning to add an AI one to do control on through an extraction. 401k. What you don't see here, we're looking, for example, to add a cell phone plan embedded into our platform. Just think you're a credit union and you want to offer your client a cell phone, an insurance cell phone. This is something that we're in the project to implement. I'm giving an example.
Arcady, a quick question. In terms of the different add-ons or module solutions that you offer, what are the most common ones that a bank or credit union will typically add on to their existing core? So, and that's part of our market approach. So okay. That's why I put 1, 2, 3. We have a very exciting discussion right now with Credit Union and Community Bank about this topic. It's what we call the pre-built white label solution. So we don't think that community banks and Credit Union are massive at a large scale ready to move from the core. So our approach is to say, okay, let's go after things that were today they're attacked by fintech. So if you're a community bank, Credit Union, today you're attacked on the teen segment, on the SMB. Down the road, it will be by the elderly people. You attacked also, not today, but a year ago it was the case. Now it's there's a slowdown on the lending on the cars. So this is our belief. It's like to go what they need. It's to be able to fast track to launch complete solution for niche segment,
because they don't have the solution. If they want to have this with their core, it's impossible. So this is what we see right now. We have traction. Phase 2, where we see also traction. It's like what you say. It's like what features. It's a la carte. What we see right now, it's mostly about onboarding. So there are a lot of solutions about onboarding. But when you take a look, it's all the time the same kind of onboarding. It's not possible. You have to abide by the provider onboarding. I can give you an example. For example, when we do the onboarding for fintech, we do, first of all, we don't ask the customer to fill the application. We just tell him, show your ID. The phone is doing not a picture, but a data extraction in real time of the ID. We prefer the application. Behind the scene, we control right away the address, the email, the cell phone. We do a match on the phone. Then we tell the customers, just give us your social security number, and then we validate. When I say that, it's like I'm giving an example. But if you want to say, okay, we want also to validate that he has a valid WhatsApp account, and we want to check his WhatsApp. We can even push a message on WhatsApp. So what we see mostly, it's like it not just Creation Community Bank embracing more digital onboarding, but smart one, different way, because customers are different. What we see also in our discussion, it's around the digital wallet, which is a big trend.
Makes sense. Do you offer, or what kind of support do you offer for kind of key user experience features?
So that's a good question. I love this question because you guys got it. I built a digital bank myself, and in all these years I was an advisor to many fintech and also digital bank here and in Europe. So certain of my competitors right now recently announced that they launching white label user experience or UI or app. What they offer, it's like it's a non-customizable. It's basically the same app for everyone. So what we did on our side, because in our DNA, we are bankers in our DNA, and we build a bank. What we build, it's like we build our own app for ourselves, and we're leveraging the code we did for ourselves to offer customizable app if one of our fintech wants, or a community bank or wants it. The disclaimer: I'm not saying this is an aggressive product for us. This is a defensive product for us. I believe that any entity, either a bank region or a fintech, they need to control their app. So I'm not saying that we are here to say we're pushing it, we're forcing it to bite. On the contrary, we say they should own it. But we have it. But we have it differently because it's fully custom made. But what we do, we bring the features, and the skinning can be done by anyone. But we bring features that most of my competitors don't have, and I will give a few examples after, because we have a Lego box as a platform, as a modular banking platform to build it. But so what you see in the middle, for example, you see it may look. Let me make it bigger. It may look flashy, but it's more than flashy. For example, for one of our fintech, we embedded a QR code where we put all the banking information. On the other one, we're launching a neobank for the biggest fraternity in the US. We built a 4 layers administration level between the treasurer, the president, a member of the fraternity, and even candidate fraternity. So we built in-app a 4 layers administration level. We also build a collect just features. That's what is called send money to the fraternity, to the lodge. So you see, it's like it's not something like you would see somewhere else. So this is, but again, every community bank, credit union should control it, and it's not super expensive to build its own app. What is crucial, it's to have providers who have a very good API, but more important, a modular banking platform to build what you need. And this is where we believe there's a need on the user experience or UI. It's the product. And I'm giving you, for example, so if you think about Current, which is a big digital bank, not digital bank, sorry, neobank, not even neobank, it's called fintech in New York, or Apple did it, or Revolut, which is one of the biggest digital bank in the world, 35 million. They built what is called a sub account. So you can call a sub account, envelope, pocket. Nubank in Brazil, which is the biggest digital bank in Latin America, they called it Kexa. It's like an envelope. So we built in our technology already like a sub account. So an end user is going to the account. In a fraction of a second, it can create a separate account for budgeting or for saving or for sharing expenses with a third party, or just for chores for kids, for example. So this is a feature that we developed, and we can offer that to any Christian community bank or fintech. Another features, it's like yes.
Question. So you're actually, it sounds like you're offering two different, like it's two different solutions, and just I'm paraphrasing here maybe, but it's I mean you help improve financial institutions' cores by adding on additional technology solutions, right? But and those additional technology solutions can be fintech provided ones, in which case those fintechs are utilizing probably the credit union or bank's charter to offer services. So it's kind of both ways, right? It's helping connect to fintech solution providers, but also just building out additional services that a bank or credit union may not have relative to the core. Is that accurate or fairly accurate?
Yep. But what you see on this slide, we built it. It's not an external fintech. It's us.
Got it. Okay, yes. Understood.
And just to comment about, I'm going to make it focus about the sub account. The sub account or shared account, it's I'm not talking about, because we have this technology already available, but every community bank, every credit union should think about it, because this is increasing the engagement with the customers, increasing the deposit, and facilitating opening new accounts. So Revolut in the UK right now, and not just UK, in the world, even here in the US, they offer that. They have a sub account feature. It's like a joint account or shared account, joint account 10 years ago. But here it's like it's not a legal account. It's like you can share expenses with other people. So it's like you increasing the engagement. So really, it's like it's something which is going to be a revolution in the banking industry. And it's not new. The concept is not new. The technology is new, but not the concept. I was doing that 2 decades ago with another technology in a different way. It just like it's a new way of banking. And I'm not saying that because we have it, Agora. Just take the biggest digital bank in the world. All of them are pushing that because that's how they gain customers and how they're increasing the deposit. Another features that we have developed, and it's coming very social environment and things like that. So PayPal, Venmo announced last year a donation charity feature. We already built that feature in our platform. Meta, Facebook last year announced that they deploying within Meta platform a share transaction feature. Basically, you did a transaction on Meta, you can share with another user on Meta. So we did the same logic in the banking world. So we built that setup in our embedded in our platform with 2 phases. Phase 1, which is already live today, it's between users of our platform. They can do a transaction and ask for reimbursement to a third party. And next year, we're launching a phase 2 feature, which is you can ask someone which is not on the platform, which is at Bank America, Chase, to repay you. So that's you can technically do that today, but for example, you send a text message to your friend and say, "Hey, reimburse me," and then you give your Zelec user reimburse. But you see, it's here. It will be done. It can be done directly in app in one way. Very simple.
So,
another feature.
Brendan, question. So it sounds like you've built a library of capabilities that cores don't typically offer, but competitors like fintechs do offer. Is that accurate?
Yes and no.
Okay.
Certain features of a fintech don't have it. So for example, the Money Pro, I don't see any B2C fintech, Chime or others. What is Money Pro? It's like a wedding registry, but the next generation. It's a collect fund features for parties, for birthday, whatever. We built that. I didn't see any fintech launching that. There's a UK fintech which is coming, but it's a UK one. But another example, this year, we're going to launch a new feature, which is buy now, pay later. If I stop here, you will say, we already saw buy now, pay later. But what we're going to launch, it's buy now, pay later post-transaction. Because we believe that when it's pre-transaction, okay, you did it, it's not 100% of the people. It's like then you to, but if you did a transaction and then suddenly you forgot one of your invoice, you can go in app and reinstall a transaction. So this is the feature that we're going to launch. I don't believe I saw anyone on the market having it. I will give you another features that we are launching this year. Everything is ready, but we didn't launch it yet. It's a green carbon offering. So when I say that, you will say, we saw that already. It's true. You take aspiration. When you swipe your card, they give money to an organization to plant a tree. What we did, we have the same setup, but we have an option too, where we tell the end user, it may be more expensive, but we give you, when I say more expensive, it's not the same ratio, but we give the option to the end user to not to give money indirectly to an organization, and that's it. And you don't even know where's the tree. It's pure marketing. We tell the end user, based on your transaction, you can buy a tree, and you will have a digital certificate of ownership on this tree in app. So we're going to provide two options, either something very similar to aspiration in another place, like you swipe, few basis points are going to go into like a donation trust, and we're going to disperse on the marketing to plant tree to an external organization. Or two, you buy physically a tree, or you can give a tree to your kid or to your parent, and in app there's a digital certificate. And for the SMB client, they're even going to have a carbon credit. I'm giving an example.
Oh, go ahead.
Sorry.
I'm just going to ask, how long does it typically take for one of these solutions to be deployed? Is it months? Is it weeks?
Very good question. And that's also what's from the others. So this is, for example, our team solution. This is us.
Yeah, you cut out there just a little bit.
Table. Can you hear now? Sorry.
Yeah, you cut out for a few seconds. You just might want to start. You were just showing the example of the Team Power. Yep.
An example. So this is of the features Earth versus Greenlight and Chase Power by Greenlight. So you see there's a difference of features because of our technology platform, but also because of our mindset. We're not a B2C fintech. We build a product for bank and credit unions. So now talking about the implementation. So because we come, as I mentioned earlier, we're coming with our entire stack. So we have a bank sponsor, we have card issuing, we have QAC, QAB. There's two options of deployment. One, which is basically a standalone. So we're coming, let's say Community Bank A, they want the Team Power. It can be done in 7 weeks. And what does it mean 7 weeks? That means we're creating the environment for this Community Bank A. Everything is already pre-built. The app is built. The card is already approved by our payment network, which is Visa. We have a bank sponsor, and we just put the brand of the Community Bank on the app and on the debit card, and we do all the rest. We have also a setup where either our bank sponsor is keeping the deposit, but we can have a setup where we deploy our offering for Community Bank A, and they can keep the deposit. So that's what I called standalone on the side. We have and I cannot elaborate because right now we're in discussion for this extended partnership. We are right now in discussion to be integrated with all the core. And in this model, we would be already pre-integrated with most of the bank and credit union in the weeks. It can be deployed. And when I say deployed, it's like there's nothing to do. It's like you have your iPhone, Google Map is already pre-installed. You're just using Google Maps. So it will be the same thing. So we will be de facto pre-integrated. And it's almost like a concept of open banking. So we would call directly the legacy core to pull certain information to connect to the checking account. We don't even need to use Plaid or something like that. We would be directly connected to the core and calling all the information. So it's in 2 to 3 weeks, the product is up and running.
Okay, but I want to be sensitive because we're coming up on the hour here. I do have one question because you mentioned open banking, and the CFPB I know is likely going to roll out some rules where banks are going to have to open their data via API, customer data to fintechs and others. Is that going to make your job easier or more difficult? I would assume easier. Oh, did I lose you?
No, I'm just thinking.
Okay.
I'm just thinking loud. I'm just thinking loud. It's like with what we're right now, the partnership we're implementing, we don't even need this new environment of open banking because we would be already into the open banking. Because in our system, we need the checking account information, the end user information, the balance, and just to be able to move money. So in today's world and with the existing setup, we can already do that. Open banking, it's going to be, I'm talking about the US. First of all, if you take a look at open banking in Europe, which started like almost 10 years ago, it's still not there, more or less. So it takes time. So, and the big banks are doing everything they can do to block it.
Yeah. Fair enough. Let me check to see if there are any questions from the audience, because this has been an awful lot of information all in an hour. Fascinating solution. So one, I want to see if there are any questions, and then also end it with, if people are interested in learning more about the solution and maybe adding some of these additional capabilities, how is it best that they contact you? So I guess first question is, does anyone have any questions? Go ahead,
so
Jeff.
If they want to contact me,
Go ahead. Jeff had a question. You want to just ask it, Jeff?
Yeah, I'll just ask it real quick. So just on that, Larry's last question around open banking, am I correct in thinking that this particular solution is just another input mechanism for the information that would ultimately be provided through open banking should it get through over its hurdles?
No, yes and no. So first of all, our solution is not depending on open banking, because we work as a middleware, as a power core,
right,
or as a bank infrastructure. Open banking is just for data. So the more data we have, the more product we can offer. So open banking down the road, it's all about data and access to data. But for that, you need to be able to handle the data. So that's why for us it's exciting, because we are real-time ledgering with subledger, and the more data we have, the more product we can do. Just think about, I don't know, there's so much product that can be created, even for example around insurance product with medical expenses in real time. You have just combine early wage pay access with health insurance, with retirement plan, three different product feature or setup. But if you combine all the data in real time, you see what you can build. I just did it live.
Well, Jeff, did that answer your question?
Yeah, I think so. Yep, thank you.
Any other questions? So Arcady, appreciate it. I can see you've got the email there and contact information. Also, if anyone has any questions, you can reach out to me. I'm happy to get you in contact with Arcady. Want to thank you for your time today. This was a great presentation overview. It was a little new for me as banking as a service. I know SRM does a fair amount with core, so this was a great learning opportunity for me, and really appreciate your time.
And again, the future is embedded fintech. I just want to reinstate that.
I think a lot of folks would agree on this call. So it's going to be a fascinating world for sure.
Thank you, guys. Have a good one. Thank you, Larry.
Take care.